Good morning, Tina Mitchell here with your Monday market update. Friday brought the release of much anticipated consumer price index CPI. This is one of the two biggest inflation reports from the US government and the only government inflation report that's coming out during the shutdown. With big government data being a key consideration for interest rates, the special release got extra attention. Core monthly inflation was lower than expected at 0.227% versus 0.3% forecast, as was the annual level of 3% versus a medium forecast of 3.1%. Inflation is the nemesis of interest rates, so the lower than expected result is rate friendly at face value. The underlying bond market agreed to some extent. The first reaction was stronger, thus implying lower mortgage interest rates, but mortgage lenders don't tend to publish rates for the day until around 10 a.m. Eastern Time, 90 minutes after CPI came out. In that time, bonds had second thoughts about how strong their reaction would be, possibly due to the internal components of the data that was suggested on non-tariff related inflation remains elevated outside after removing the impact from the housing payments. On the Fed front, the Fed will cut this week, even though they're in the dark on data. China trade deal, Treasury Secretary Scott Bessent said that he thinks that they'll have a very successful framework from leaders to discuss on their meeting on Thursday. It appears thus truce includes the U.S. taking threats of 100% tariff off the table and China resuming soybean purchases and delaying their rare earth export controls. The Chicago Fed's labor market indicator shows that the unemployment rate is expected to increase from 4.3% to 4.4%. Additionally, the report shows a decline in the hiring rate and a slight increase to the rate of layoffs and other separations. This week's Fed meeting could be the catalyst for mortgage bonds to break out higher and yields to move lower, and this will be good for mortgage interest rates. And for this week interest rate update, disclosure, there are many different factors that determine interest rate. Each week I share the national average, which is based on a conventional conforming 30-year fixed rate. Today, the national average is at 6.17%, assuming a 20% down payment and in the highest credit score bracket. And that is your Monday market update. Tina Mitchell, helping you finance your way home.